Evening, everyone. It's Sunday night. The futures have been open a little while, and this is your weekly gold update. It is video number 526. Okay, so the chart on the screen is the gold, and I know it's not what you're used to hearing from me, but I'm actually kind of concerned about it here. Um, and the reason for that is that we had this great consolidation, first run up and back down. Consolidation, breakout, rally of $50, pull back to that point of breakout one, two, three, four times, breaks out again, rally again. What I'm seeing here now is that we have this top. We came down hard in early August, came back up again to the point of the breakdown, consolidated, held until it didn't. And it came back down here to a level of about 1850, and it also bounced off the 100-day MA. But when it rallied, still a lower high, right back to the point of breakout. We had another pullback through the line. In fact, we traded it here on the upside profitably. We got right up here, which is below. I mean, it's a higher high than here. But in the grand scheme of things, if you don't look at that downtrend line, you go top, top, top. Now, what has happened in the past 2 weeks, and I'll show you that a little bit more clearly, is that we came back down, same area, 1850, and that was the day of the Pfizer news. And we have rallied back up to the point of the breakdown, rallied up again, came back down, are rallying up. But in the grand scheme of things, this is a very ugly little formation because it's got lower highs and has been unable to move. Now, if you use the theory that, it's very close to breaking down, so a close below, let's call it 1850. The close here is the lowest close that we had. That was 1854.40. If we were to break down from there, I'm going to guess we'd go right to the 200-day MA, which is about $50 below that. That is clearly survivable, but the issue is, where we are here tonight is 1869, almost 1870. So, do I want to take $20 worth of risk in the gold here? Probably not. If it were to go down $15, would I do it? Absolutely. Okay, the other one that I want to show because it jibes with it so well. I know this is the gold update, but I want to show you what the silver looks like here. The silver looks slightly better, only because here's a high, here's a high, here's a high, and there's a high. But we didn't have really the kind of move down in silver that we did in gold. And we also didn't have a snapback higher. That's that same Pfizer news day 2 weeks ago tomorrow. Where again, all of the moving averages are turning to the downside. And let me just make this even a little closer so we can see. Okay, so the purple one is the 5-day, and it's rolled down. The blue one is the 20-day. It's flat pretty much. And the others are really nowhere. The only one that has any bearing on this is way lower than we would want to be involved. I mean, this is $20.50 for the 200-day. So here we probably would need a close below. I want to say that's probably it, 23.36. So a close below that would probably take us down to to 2180 area, and the 200-day being all the way down here. Again, another one of those, if I buy it right here, I have a very specific stop. I'm not calling them a short. I'd rather be getting long, especially the gold, as close to that 1850 as possible. But we'll see how it shakes out. Hope everyone had a nice weekend, and I'll be back first thing in the morning.